right, cool. So let me get this finished, guys. I'm just going to post the link for everyone, and then we can get started. Let's see, we got that there. Let's forward it to all the groups. And then get it on Facebook real quick. All right, cool, guys. So I'm going to give some time for people to show up. If you guys have any questions or if you guys want me to look over any specific pairs, feel free to put them in the chat, and then I can go down each question. Otherwise, I'm just going to scan through the pairs. And then we have a lot of people that want to go over the K2 pivot strategy. And then maybe I'll look up to see if there's any, we're in Asia session, so it's moving kind of slow, but I'll see if there's any entries that we can scalp off US 30 live. Since, you can see right here, it's in a pretty strong uptrend. So we can probably go on the lower time frames, like the 5 minute, and we could literally scalp this up. Like there's a nice scalp right here that could have been taken for about 770 pips. And it's perfect because right now it's in a sell signal. So once we get a buy signal like we did right here, we can go ahead and ride that up. And that's just going to be using the K2 pivot strategy, which is going to be pretty simple. So I'm going to go over, pretty much everything, and then we'll get started shortly. Let me see. All right, cool. So we got, he'll be there. He was asking if they did Zoom still. The FIFA sloth. Shawn. All right, cool, guys. So let's see. I don't see any other questions. So if you guys have any questions, feel free to put them in the Q&A, or if you guys are on the YouTube, just put it down in the chat. It'll probably be easier for us to take a look. So like I mentioned earlier, I'm gonna go over pretty much all the pairs and see if there's any entries right now. We currently have a sell for AUD/USD right here. It's literally about to hit full TP. I think a lot of people already got out actually, so it's only a few pips away from full TP. We also have a CHF JPY position that's active right now. It's currently in profit, but it's like right at entry. So it's going to move really slow since we're in Asia session. On top of that, we have Euro GBP right here. I think a lot of people got out towards the top. I know I did once it reached TP2 and I saw the spike up. I just manually closed it out. But if you guys are still in the trade, I would just at least move your stop loss and profit just in case. And then you could pretty much, you just let it run. But if it pulls back and, pulls back to your stop loss that's in profit, that would be completely fine because it did shoot up a lot. So let's see, it shot up from right here, all the way up to here, about like 40 pips. I got out around 35 because I just moved my stop loss up as it moved, and then I got stopped out in profit. And lastly, we have NZD JPY right here. So this position right here is about to drop back down. It's at entry, just like CHF JPY. But we will take a look later. It's going to move slow because Asia session is barely opening right now at 4 p.m. So it's literally opening in a minute. So once it opens, we're probably going to see more volatility in the market. But we're just going to have to give it some time because, you guys are aware, Asia session is the slowest session. Let's see. Nassim said, is the K2 pivots like the actual pivot points? Not necessarily. The K2 pivots are kind of based off EMAs. So what they are, they're dynamic pivots. So, as price moves, I'll just go to another chart that's clean. Something like this right here, this is testing. So I'll just put this here. And, if you have the pivot points that are open, so these are the pivot points right here. You can see that the K2 pivots don't reach those specific points. The thing with the K2 pivots is that they're dynamic. So as price moves, the pivots move with it. Pivot points are they're already established on the chart, as price gets to that price point. But with the pivots, they're dynamic. So as price moves, the pivots move with them. So there are two different types of pivots that you can use. I mean, they can be used as rejection points. They can also be used as determining where the trend is. So we use it for both. For the most part, we use it to determine the trend for that specific time frame. Obviously, price is above the pivots like it is right here. The pivots are spread out. They're all angling. That's going to signify an uptrend. And then if you pair that with the K2 momentum indicator, which is these vertical lines, pretty much, obviously, if price is trending up and then you get a momentum swing upwards, it's common sense to take a buy right there. So if you take a buy right there, you take that up and then ends up hitting full TP. So we'll go over that strategy a little later too, just so you guys can see. There's a lot of questions going around asking how to apply it specifically for intraday and how to apply it for scalping. So I'll go over that as well. It's kind of perfect because we're during Asia session, so it's going to move kind of slow regardless. So it'll give us some cushion and space to, look over things in detail. So if you guys have any other questions, feel free to put them in the chat or the Q&A if you guys are on the Zoom. Let me see. I don't know if there's anyone here on the Zoom. There might be a few people. No. So yeah, if you guys have registered for the Zoom before, you guys should have the link for it if you guys really want to be on the Zoom, but it's not going to make a difference because it's the same thing with the chat. So if you guys are putting your questions in the YouTube chat, it's going to be the same difference if you're in the Zoom because it's a webinar setting anyways. So I'm going to be the only one talking. But if you guys do want to talk, feel free to let me know. And then, I can open up the mic for you. But I think it'd probably be best if you guys just put the questions down so that we can get through them in order and we don't skip over any questions. But let's start off with looking at pretty much every pair. I'm just going to analyze them real quick just to see if there's any entries, after us coming back from the swap spread. So let's see. Let's go down the list. First pair right here, CAD. So it looks like it broke this right here. What might happen here is it's probably going to keep dropping a little more because it looks like the Aussie is kind of weak right now. So since this broke this zone right here, it's probably going to come down to test this zone. And then it'll probably either reject off or continue downwards. And then if we turn on the pivots, we can see what direction trend is. Trend is obviously trending down. It's below the pivots. So I do consider it in a downtrend. So it's probably going to continue down. However, this was a big drop right here. So you can see this huge candle. This dropped about 70 pips. So, there might be some sort of retracement. There might not. It's just we're going to have to see how the market plays out. Let me check if there's any news coming up as well, because I'm not sure if that's going to affect the market. Let's see. Actually, yeah. So we do have news coming up at 7, which is in about 3 hours. So we would have to watch out for that. Probably won't be taking any NZD positions. I think we have one that's active right now. Yeah, we have NZD JPY. So I'm probably gonna warn you guys to move your stop loss and profit or exit and profit if you guys want to. But we'll make it down the list. So I'm still on CAD right now, and I'll just keep going down. So I was gonna call this trade right here, but like I mentioned, this moved down like about 70 to 75 pips. So the problem with that is it might have to fill the gap. So it might come back up a little bit before dropping down, and that's why I didn't call it, because the last thing you want to do is enter a trade prematurely. Just due to this big movement, and then get caught in, any type of reversals. So let's check out odd CHF. This is within the zone right here. So I'm not going to take any trades until it either, breaks above it, and then we could ride that to this next zone, or if it breaks below it right here, and then we can ride it down to this zone. So yeah, I'm going to hold off on that for now because you can see right here. So this is exactly what I'm waiting for. Like right here, price came down below the zone, And then once it broke above it, like you can see this green candle, once it did that, it ended up shooting to the next zone up here. And that's what I'm anticipating to happen right here. So if it breaks below it, then I'm going to anticipate it to come down to here. If it breaks above it, I'm anticipating it to come up this way. So I will wait for that to break outside of the zone, and then I can check the momentum indicator to determine, you know, where momentum swinging. Obviously, momentum swinging down. I don't think we took this trade, but it looks like it would have been a good trade if we took a sell once we got this momentum candle, and then we could have rode it down to this next zone. However, it was only about 14 pips. That's probably why I didn't call it. It was just too tight, especially with the spread. You'd have to cover a 4 spread going in and a 4 spread going out. So that's about 8 pips. You know, it's really tight margin if you're going to try to scalp that. So let's keep going down. Nassim said CHF pairs are scary. I try not to mess with them. I agree, especially right now with you know, the FOMC and, you know, just COVID and everything. Since they are a safe haven currency, just like the JPY, they, you know, you see some pretty erratic movements here. Like even with this, I got the sell signal and I was so tempted to take, you know, this sell right here actually, as it broke this zone, because I was anticipating it to come down and test this zone like it did exactly right here. But I was worried that it was gonna, you know, shoot up, because when the FOMC speaks, you know, obviously they're gonna try to say stuff that's good for the US economy. So if it's good for the US economy, you know, the safe haven currencies aren't gonna be as strong. So that's why I was worried that if I was to take any trades here for CHF or even the JPY trades, you know, you'd see a spike down because they have bad news about the US and then it spikes back up. So that they're kind of risky to trade right now. It was kind of risky to even take these CHF JPY, this trade right here. You can see right there, it's like a small spike up. And then same with the NJ. But then I did see that most of the JPY pairs were dropping. And that's why I ended up taking those entries, like right here with AJ. And then I think EJ, it was dropping a bit. And then GJ as well. Like they were literally all dropping, they all correlate. So that's why I was like, okay, if the JPY is dropping for these pairs and we have an entry for CHF JPY plus NJ, I was like, we might as well just take it. So I decided to take the risk, and we'll hopefully they'll drop in profit before the New Zealand news in about 3 hours. So we'll just have to give it some time, because, you know, during Asia session, there's no way to really determine where it's going to go, because price could be going down during Asia session. And then once we enter London, it might just skyrocket like in the opposite direction, especially because I think tonight there is a lot of news. There's a ton of news tonight. So once London opens at midnight, there's Euro news, and then there's another Euro news right after. I mean, it's literally all day. So I don't recommend trading London session unless you're going to trade like after 1:30. Because there's literally back-to-back news. So like the last thing you want to do is get into a trade. It spikes in one direction, the other news happens, spikes in the other direction, and then it just keeps spiking back and forth. Because if your stop loss is too tight, then, you know, odds are you might get stopped out before it gets to exactly where you want it to go. So it would just be too risky, you know, for me to take this trade. If you guys want to take the trade, feel free. But, you know, just be aware that there's a lot of news this morning. There's news at 12:30, and then again 15 minutes after, and then again 30 minutes later, and then another 30 minutes later. And then again in the morning, there's going to be US news plus the Fed speaking at 7. So like you have to be on your toes, like literally during this entire time, or just be scalping within, because you don't want to get caught in a trade and then it ends up spiking back and forth, you know, due to every news event. So just be careful with that, guys, if you guys are trading during London session. Otherwise, you know, just keep your stop losses tight, exit when you have profit, and then pretty much just ride that wave. But so we're right here on AUDJPY. Like I mentioned right here, you know, what's going to happen here is probably going to, it'll probably retrace up a little bit. And then if the JPY keeps dropping, it'll probably drop down even further, you know, to match up with pretty much all the other JPY pairs. So let's go back to AN over here. Let's take this off. So you can see right here that AN is pretty much establishing a downtrend. You know, if we turn on the pivots to make things easy, you can see prices below the pivots right here. So, and the pivots are angling down and they're spread out. So it's clearly in a downtrend. You know, another confirmation, if you want to turn on the K2 trend meter down here, you can see that it went from a downtrend to neutral. So it's literally just bouncing around. So there's one confirmation from the pivots that price is trending down. Also from the trend meter, it was slightly trending down and then it kind of crossed over. And if you want to do it manually, you can always, pull up the parallel channels and draw your own channel right there. It's obviously in a downtrend. So what I see happening right here is, let's turn on the momentum indicator. Right here, we got a buy signal. So once we have a buy signal, the next signal has got to be a sell signal. Like you can see right here, when you have a buy signal, it just retraces up a little bit. And then once we get that sell signal, it comes crashing down. So that's what I'm waiting for right now for AN. I'm anticipating this to probably come down a little further. And then once it drops heavy enough, it'll probably get a sell signal. And then we can ride that down to this next zone over here. Because if you look at the charts, I mean, it's real simple if you like mark it up the same way I do. Literally, price just goes from zone to zone. So it comes up, retest, continues upwards, break and retest, continues upward. And then it didn't break up here. So obviously it came back down and then it did the opposite. So instead of pushing upwards, it started pushing downwards. So if you look right here, it looks like price is still pushing downwards. So pretty much, this is the same as using the pivot strategy. So if I show you the pivots here and we turn on the momentum indicator, see, this would be a perfect entry right here. You can see that, here, I'll just show you guys an example for it. Because I know this is something that a lot of people were asking about. The thing with the pivot strategy is that it can be used on any time frame. You can use it on the 10-minute if you want to scalp. You can use it on the on the 1 hour if you want to trade intraday, or even the 4 hour. Me personally, I like to trade it on the 4 hour. So right here, I'll just put the requirements so that you guys can see. And then I'll just type it all out. So this is the K² pivot strategy. And the first requirement is that you identify the trend using the K² pivots. Second, identify retracement pullback. Third, identify rejection off K² pivots area. And then lastly, confirm a valid K² signal. And lastly, enter on the open of the following candle. So it's real simple, guys. It's a step-by-step process. Nothing ever really changes. Pretty much the same thing every single time. So right here, you want to identify the trend using the K² pivots. When price is below the pivots are all angling downwards like they are right here, and they're spread out. That's going to confirm a downtrend. If price comes above it, like the opposite direction over here, so price is above the pivots are angling upwards and they're spread out, that's going to confirm an uptrend. So this is an uptrend, this is a downtrend, this is consolidation, crossover, and then here is a downtrend over here. So once we have this right here, we're going to identify a retracement pullback. Sorry guys, let me step away for 1 second. Sorry guys, I had to pick up a call, so here I am back. So pretty much right here, we'll go back to the first requirement, identify the trend. So since price is below the pivots right here, the pivots are all angling downwards and they're spread out. That's going to confirm a downtrend. So for the second requirement, you want to identify a retracement pullback. So as you can see right here, price was coming down and then it rejected off this K2SR zone right here, and then it shot back up. So that would be the retracement pullback. And then lastly, you want to identify a rejection off the K² pivots area. So we got the first rejection right here, rejection retracement, pulled back right here. And then as it reached this high right here, it rejected again off the K² pivots. Once it rejected off that point, it came right back down. And the last requirement right here, confirm a valid K² signal. So right here, we have a valid sell signal. And this is valid because it is a sell signal with a red bearish candle. So once all those requirements are met, you can enter on the open of the falling candle. So we'll enter a short position right here. And then with your stop loss, it's going to be very subjective. Like generally, I like to put it at the previous swing, which would be somewhere around here. But you can put it at, one of the last pivots if you don't want to have such a wide stop loss. Or if you guys want to have a wider stop loss, you can bring it up to the swing previously to the most recent one. So depending on your risk, you guys can put your stop loss over here to 80 pips, or you can put it down here to about 50 pips, or you can put it even down here at 30 pips. So I'll just keep a middle ground right here. I'll leave it at about 50 pips. And then you guys just always have to remember to use proper risk management. So, you know, as price moves down, so generally what I like to do is I like to put my markers at like the 25% mark, the 50% mark, and the 75% mark. So as price comes down to these points, I move my stop loss to that point right there. And then when it comes down further, I'll move it down to there. And then when it comes down further to here, I'll move it down to there. And then there's a ton of different ways to use the exit strategy. I think I have about 3 or 4 that are available on the website. So if you guys want to go check that out, feel free, but I'm just going to keep it simple. So as price reaches, I'll keep it even more simpler. So I'll take off these. And once price reaches halfway mark over here, 50% profit, then I'll move my stop loss and profit to the 50% mark, and then I could let it run. So so in this situation, if price comes down below this point, you can move your stop loss to this point. So if price is to reject off that K2SR zone, you get stopped down a profit for half profit right here for about 25 pips. Or if it doesn't reverse up like that, you can pretty much write it down to full profit. So it's really up to you on your risk tolerance. You know, everyone trades differently. It doesn't matter how I explain how to exit the trade. You know, depending on how you like to trade, you're still going to exit the trade however you like, because new traders, they don't have the trade psychology to hold on to a trade, you know, until it moves down further. If you're a new trader, you're probably going to want to exit and profit. So it just really depends on, you know, your experience and how you like to trade. So, you know, I provide different types of exit strategies on the website, so you can go check those out and see what fits your trading style. But let's let this run here. And as you can see right there, it hit full TP. So if you were to put your stop loss right here at the 50% mark, you would have gone stopped out here for 25 pips. However, like I mentioned earlier, if you have, you know, a huge risk tolerance, you would have just let it run to full TP. It just really depends on you, because not everyone has thick skin to hold on to this trade. If, you know, if price here, so if I take off the indicators, if price was to come down right here, and then like this is exactly what I mentioned earlier. You know, if price was to reject off this point, you get stopped out right there. But I know for a lot of traders, including, you know, myself, sometimes if we saw this rejection right here and you see this pullback so far back, I'm sure a lot of people would have been freaking out like, oh crap, I should have just exited in profit. And that's why, you know, it just really depends on your trading style, because not everyone can stomach this big spike up. Because like obviously if price came down here and then it retraced up, you'd be in negative like 55 pips, and you know, you'd have regretted not moving your stop loss. But you know, if you have thick skin and you've been trading for a while, you're like, all right, that's normal. So you just hold on to it and let it drop to full TP. And like I mentioned earlier, it depends on where you want to put your stop loss. Like if you want to put your stop loss wider up here to 80 pips, you could do that. It's just really up to preference. And if you did that, it still would hit TP down here. So, you know, the strategy works both ways. It just really depends on how you want to trade it and, you know, your type of trading style. If you like to swing trade, then, you know, maybe this is perfect for you, where you can pretty much just set it and forget it. But if you want to scalp, you can always go in the lower time frames. So this is the 4 hour, but you can use this again on the shorter time frames if you want to scalp. So if I go down to like the 10-minute, and then, you know, you could apply the same exact strategy here. Like we could even rewind it to that point, and same exact strategy. Let me turn on the pivots because we need that. And then the momentum indicator. So let me just grab this over here, and then we'll zoom in right here so I can show you guys. So instead of just having that one big move for like 80 pips, you could have taken a bunch of smaller moves right here. So you could have taken like this entry over here, but your stop loss would be at the swing up here for like 38 pips. And this is if you want to scalp. You know, some people just don't like to swing trade because they don't have the patience to hold on to a trade for, you know, X amount of time for it to hit. So if you wanted to scalp, you could also scalp right here. You know, your stop loss probably wouldn't be that wide if you're scalping, but if you were to put it at your previous swing, it'd be up here, and then you could just keep moving along. So right here, there'd be another entry. Same thing, price is trending down because below the pivots, they're angling and they're spread out. So right here, price comes down, retracement from this point, rejection right here, sell signal. So you could have entered a sell position, you know, somewhere right there. And then your stop loss would be the swing up here for about, I guess, 12 pips, or I guess 15 pips. And then you could have rode that down to here where it, you know, eventually would have hit TP. So there's like one entry there, there's one entry right there, there's another entry right here. So it really depends on your trading style. If you want to take a whole bunch of trades, you could take a whole bunch of trades right here, another full TP, another one right here. Swing would be up here at this point because obviously price swings down, swings up. This would be the swing for about another 15 pips. And then obviously hit full TP right there. And then again right here, there's another entry. So instead of having like one position for like 30 or 80 pips, depending on, you know, where you put your stop loss at, you could have had one, there's another one right here too. You could have had, and this would have hit TP way down there. So you would have had, instead of having just one big win, you could have had a whole bunch of smaller wins. I'm trying to fix this. All right, so instead of having one big win, you'll have 1, 2, 3, 4, 5, and then so pretty much 5 times 15, you'd have 75. So, you know, it still equates to about the same amount of profit if you were taking the full move versus taking a smaller move. But, you know, like I mentioned, not everyone can hold on to that trade for, you know, a couple hours until they decide to pull out. If you just scalp it, then you can pretty much just, you have the same, you know, profit potential, but you're just doing more work. So it just depends on how you want to trade it. And that's pretty much the difference between, you know, scalping and trading on the intraday, like on the 4-hour right here. And it's the same exact strategy. You can use it on literally any time frame and on any asset. But yeah, it's real simple. If you guys have access to the K2 indicators, you know, that's what most people are using right now, especially with the high volatility. So if you guys are interested, you know, feel free to check it out. But okay, so that's odd NZD. So like I mentioned, I would be waiting for a sell signal. So once we get a sell signal, like we did right here, obviously this hit full TP down here, you know, I would be waiting for another sell signal somewhere around here. So once we get a sell signal, then I can enter another sell right here and then pretty much just ride that wave to full TP. Because the thing is, for us, we're not predicting where the market's going. We're not trying to push the market. Literally what we're doing is we're trying to see, you know, where the market's moving, and we literally just ride the wave. Like you can see it looks pretty wavy just by looking at it. You can see price just goes, it waves down, waves up, waves down, waves up, waves down. And then again, right here, it waved up. Once we get a sell signal, it's going to wave down again. And then as it does that, we just pretty much piggyback that wave to full TP. And it's real simple. I mean, we're literally just following momentum. If we get a momentum signal, we just ride the momentum with the trend. And then once we hit TP, you know, we exit and then wait for the next entry. So that's odd NZD right there. Let me keep going down the list. Here's our odd USD. I think this will hit full TP because exactly, and Nassim said reactive, not predictive. So that's pretty much what we're doing here. Like for odd NZD, we're not trying to predict, you know, like I'm not like, okay, price is going to reject off this point and it's going to come down. No, I'm not trying to predict that, because whenever I predict something, it's probably going to go the opposite way. So instead of me trying to predict where price is going to move once it gets to a specific point, I'm just reacting to price. So if price breaks down below here, I'm just reacting to it and then I'm riding it with it. Because I'm not, you know, it's nearly impossible for you to really predict where price is going to go. I mean, you can guess, but, you know, to have a high accuracy in predicting, you know, these rejection points, like it's kind of hard to determine if this was going to reject back downwards this way, because it broke the structure right here. So generally, if it breaks the structure like it did right here, like it, so if you're doing like normal price action, and then you're going to identify this right here. So let me take off these indicators. See, for a normal trader, if you're going to predict the trade, like once it breaks above here, this looks like a, you know, classic break and retest. It breaks it, retest it right here. And then obviously if it's bullish candle, you would anticipate it to shoot on up, right? But it doesn't do that. It does the complete opposite. And that's why I don't like to predict, how price is going to move. I'd rather just react to it as, it confirms my requirements, which is, it's proven to be very accurate. So for me, it's more about accuracy than taking a bunch of trades. And that's why I trade off the 4-hour versus the 10-minute. I used to be a big scalper, but it's just stressful. Like literally you have to be watching the chart like all day. But yeah, back to odd USD over here. For all the odd pairs, it looks like they're all kind of coming down. So it looks like the Australian dollar is weak right now. So that's why I think odd USD is going to continue down and hit our full TP. However, I'm not in the trade anymore. So I exited it once we reached like half TP. Like once it reached down here, when this happens and you're only like a few pips away from full TP and I'm watching it like manually, then I'll just exit it. Like I'll just close the trade because I'd rather exit with like, this much profit, like 50 pips profit, rather than holding on for like the last 5 pips. And I know that's a big problem for a lot of people because, greed always gets the best of us. But this is like something that you should probably keep in mind because, these 5 little pips down here is not going to make a huge difference. You might as well just close out and just look for the next trade. But if you guys are still in it, I think it's going to continue down because all of the Aussie pairs are heading down right now, it looks like. Let's move on to the next one, Cad Chf. Looks like this one's stuck in a zone. So pretty much once it's stuck inside a zone, I wait for it to, break outside of it because it's stuck right here. So I wait for it to break outside of it, like probably not right here, but maybe out here. And then I'd probably just ride it out. Or if it drops down further, like down here, then I'd probably ride it out this way because it seems like it was in consolidation. Let's see. It looks like it was just consolidating right here. And then it's attempting to break out of it. So once it does, if it breaks above here, then we could ride that up this way. If it breaks down here, then we could ride it down this way. Let's see, Cad JPY. I think the JPY pairs are still coming down. So for this pair right here, for Cad JPY, I probably anticipate it to probably, and this is just me anticipating. This isn't me predicting because I'm just trying to get a storyline as to how how this is going to move. Like move up here, then reject off there and come back down here. And then once it breaks below, probably head downwards. But what I mean by anticipating rather than predicting is that I'm not going to put a sell position here just because I anticipate this to come down. Like I'm not going to do that and then hope that it's going to come down. What I'm going to wait for is I'm going to wait for the rejection, and then I'm going to wait for a sell signal. Like right here, see this? It's like pretty much the same exact setup. Like you guys can see, it's going to use a different tool so I don't have to, whoops. Never mind. I'm just gonna, because I don't want to mess with my rectangles, because if I use the other tool, I'm gonna have to redo it again. But yeah, so basically what I was trying to explain is that this situation right here happened right here already. So, some people would have taken a sell right here, which could have played out perfectly, but it could have also played out horribly wrong. It could have just, continued up. But yeah, for me, I wouldn't wait. I wouldn't enter just because it, gets to this structure right here. I would wait for a sell signal like right here. Although I'd miss out on all these pips, I'd rather be safer than sorry. Because even if, if I'm just patient and I wait for this entry right here, I could still make a ton of pips going down here as well. So right here, I'm anticipating a rejection off this point. And then once I get a sell signal like this right here, I can go ahead and enter a short position and then write it down. It's all about patience. Trading is it's a game of patience. Because if you over trade and you take too many risky trades, like I would consider this a risky trade if I was to just wait for it to come up here, and then I would have like a sell limit right here. So as soon as price comes up here, it'd fill my order. I'd consider that a risky trade because there's no guarantee that it's going to reject off it. Like it can either reject off it or it can continue up and then hit your stop loss. So, it's a game of patience. So yeah, for Cad JPY, we did get a buy signal right here. So after this, I'd probably be waiting for a sell signal. Same with CHF JPY right here. Same situation. It's coming up to this point. You know, currently we're in the trade already, but if it was to come up right here, I'd anticipate a rejection off it, and then, you know, come down to our either TP1, TP2, or maybe in full TP. But we're already in the trade, so I'm not worried about this, because it seems like all the JPY pairs are kind of weak right now, or the JPY currency is strong, so that's why they're heading down. So this is one question I get a lot too. Basically, guys, if price is going down, that means that the second currency is strong, is gaining in strength against the first currency. And the opposite, if price is going up, that's going to indicate that the first currency is stronger than the second currency. So obviously right here, when price was coming down, the Japanese yen was stronger than the Swiss franc, and then it came up right here. The Swiss franc gained in strength, and then right here, it corrected back downwards. So let's see. Euro odd. I can't remember if I called this trade. I mean, it looks like I wish I did. Let's see. I don't think I called that trade, unfortunately. Yeah, last time I called Euro odd was on the beginning of the month, on the 3rd, where we hit full TP for that one. So yeah, unfortunately, I didn't call this trade. I think it was because it was too close to the zone right here. And, you know, like I mentioned, you know, I don't want to jump into a trade too early, because, or I don't want to jump in a trade that's too close to the zone, because what happens generally is it rejects off it. And that's exactly what happened here. So price came up to this K2SR zone, and then it rejected right off it, but then it corrected back up like it normally does. But I think at that point in time, when I saw this entry, it was probably too close, and that's why I didn't take it, unfortunately. This is a Euro CAD position. I know some people it filled for. You know, if you just look at the chart here, obviously it didn't fill. If you like we're going by the numbers. For me, it didn't fill because my spread was so tight. So if you go to the shorter time frame, you can see that price got very close to the entry right here, but it technically never hit the entry. So that's why it never filled for me. That's why I told you guys to cancel it. I mean, unfortunately, it seems like it triggered for some people, because let's see how many pips is it from there. Yeah, it's only about a few pips, like 1 or 2 pips. So if you had a wide spread, then it probably would have filled for you, especially if it was during the swap spread, or, you know, during changeover. So me personally, it didn't fill for me, and that's why I didn't get into this trade and I got out. But I think a lot of people, well, I mean, not a lot of people, but probably like a little less than half the people who put the pending order ended up getting, you know, pulled into this trade. And it happens. I mean, you know, there's nothing you can do about it. It's just your broker's spread was just a little too wide. James said, so we don't need to use a trend meter for the strategy, correct? That is correct. So if you're using the pivot strategy, the only indicators that you need are the K2TS momentum indicator, which will be your catalyst to tell you when to enter trades, and then the pivots indicator. So those would be the only 2 indicators that you really need for the strategy. But if you want to add on, you know, other indicators, if you want to add on like the zones for extra confirmation, or if you want to add on the trend meter, you're more than welcome to add on those indicators just for an extra confirmation. But they're not necessary, and they should only be used as an addition to the, you know, original indicators that you're supposed to be using. This actually looks like a nice pivot entry right here for ECAD. The only reason why I wouldn't enter this is because it's pretty close to this zone. I mean, it's not super close, but it's close enough. It's 30 pips. So what I anticipate happening right here, because we do have the catalyst right here. So generally, I wouldn't anticipate a rejection off any of these zones. But since we have a sell position, I mean, a sell signal, I anticipate it to come down and test this part right here at the lower end of the zone, possibly break through, or if not, reject back upwards. And this is how everyone should be thinking. Like, whenever you guys think about a trade, you guys should think of all the scenarios. I know a lot of people just like to think one way. They like to, you know, if they see a sell signal, they're like, all right, it's going to come down. And they think it's going to come down like super far. But, you know, when you're analyzing a trade, you have to analyze both sides. Like, you have to analyze your best case scenario where it breaks below and yeah, it shoots all the way down. Or you have to also analyze your worst case scenario where it comes down and then it rejects back upwards. So in that situation, you can plan for if this happens. So if this happens, you know, that's awesome. But if this happens right here where it rejects off, you always have to plan to move your stop loss. So if it gets close to this point, just make sure that, you know, if your stop loss is somewhere up here, at the swing, as price comes down, make sure to move your stop loss to like this point right here, so that if this does happen where it shoots up, you get stopped out in profit. It's a risk-free trade, instead of, you know, just praying that it's going to come down super far and never move your stop loss. You know, it's all about strategizing. It's like trading is like a game of chess. Like you have to go and you have to analyze, you know, both sides of the playing field, not just, you know, the side that you're like banking on to happen. And that's how you can become like a long-term consistently profitable trader. It's, you know, you have to really analyze the chart. You can't just like go one way. You have to analyze the best case scenario and the worst case scenario at the same time, just to you know, manage your risk properly. So if it's, you know, if it's risky trade, maybe go easy on your lot size. Maybe risk 1%. If everything's pointing in your direction, maybe you risk 5%. You know, what I recommend is between 1% and 3% normally. So 1% being conservative, 3% being moderate, and then 5% being risky. So depending on, you know, how the cards play out in your favor, you can determine, you know, what lot size you want to use and if you're going to be moving your stop loss or not. But okay, so that's Euro CAD right there. Let's go over to Euro CHF. Price is trending down. So same situation right here. I would be waiting for a sell signal. So once we get a sell signal, then I could probably take a sell. Kind of similar to what happened right here. So price, you know, if we're looking back at the same strategy that we've been looking at for the K2 pivots entry, basically price comes down, it's trending down because price is below the pivots, they're angling down and they're spread out. So if we were to look at this right here, we see that price comes down, it retraces from this point right here, retraces up, rejects off this point, sell signal. Once you get that, you can enter a short position right there. And then what do you know? Comes down. So right here, it looks like the stop loss is a little too wide. We might have, and then this is what I mentioned earlier. So how I mentioned how you analyze, you know, where your points of risk are. So like right here, you can see that there's a zone right here. So since the zone is so close, you might not want to take this trade, but if you want to be risky, then you know that the bottom zone is down here. So as price comes down to this point, you might want to move your stop loss from up here to maybe somewhere down here, just in case it, you know, shoots up on you. Because if you did that, so price comes down, you move your stop loss and profit. And then if price was to spike up like that, you would get stopped out in profit. So instead of taking a loss over here for, let's see, instead of eating a loss for 30 pips, you would have made a profit for half of that, 15 pips. And it's all about risk management. You know, the real key here is risk management. Like once you get better at, you know, just following the rules and everything just becomes real simple and second nature to you, the real key in surviving and trading long term is going to be risk management, because like a lot of people are focused on getting those big wins, but the real key is to not lose. If you can minimize your losses and just stack your wins, even if they're small wins, you know, you're going to end up in profit at the end of the week, end of the month, end of the year. There's really like no secret to it. Oh yeah, okay, so Wayne is asking, sorry, let me get some water real quick. All right, cool, I'm back. So Wayne said, I'm showing someone how you explain the pivots. Can you clarify pivot entries meaning you can stack positions based on rejections? So Wayne, this is, what you're mentioning is it's a little more advanced. So I don't recommend you do it until, you know, you're really comfortable with it, but I'll just show you how it's done. Let's see. This team said when they say 5% risk, for example, in a 1K account, that's $50 for 5%. Do they mean their lot size is 5% or 1K or? Yeah, and it seems so basically 5% of a $1,000 account will be $50, just like you mentioned. And that's what you should be risking per trade. So I'll just show you an example right here. Sorry, Wayne, I'm gonna get back to your question right now, but I'm just gonna show you an example. for Nassim's question. So he's talking about a $5,000, I mean, a $1,000 account. 5% of that is going to be 50 bucks, right? So if you won this trade here, you're risking 5%, your account would turn from 1,000 to 1,050, right? Because you add that, now it's 1,050. Now, if you take another trade that's 5%, what's 5% of that? Now it's 52.5. So 52.50 plus 1,050. Now your account is at 1,100, right? And then what's 5% of that? You're literally just compounding it. It's 55 bucks. So now you're at like 110 plus 155 bucks, I think. Sorry, I lost track of the numbers. So then your account just keeps growing, and it just keeps growing and growing. And that's how you compound the account. And I know a lot of people trade on, MetaTrader, so it's kind of hard for you to really gauge that, what the 5% is. But if you're trading on Forex.com, you can like just hit buy, and then let's go to the paper trading account. So I can just show you guys. So if you're trading on Forex.com, say if you want to enter a sell here or something, and then the account is, I don't know, how big is this paper account? Let's see. 100K. So like just using, 1,000, for example, or let's just change the number here. All right, it's not gonna work because I'm gonna have to run the trade anyways. Like say if you're doing the $100,000 account, right? Just for example, and your stop loss here is gonna be like 30 pips. Instead of having to calculate this, which a lot of you guys have to do because you guys trade on MetaTrader, if you're trading on Forex.com, you can just type in the risk right here for 5%, and then it'll do everything for you. So one $1,000 account versus a $100,000 account, 5% of that's gonna be 5,000. So instead of having to figure out what your lot size is and calculate all the risk on your own, you literally just type in the risk right here, like 5% or 3% or 1%. It's really up to you, and it just automatically does it. And then you can pretty much just do that for every single trade. Let's see. Asim said, so basically when someone says they risk 5%, that means their stop loss or TP got hit and they gain or lost 5%. That's correct. That's correct if you're letting the trade run to like full TP, if it's a 1-to-1 risk to reward. But if you're minimizing your risk, so say if you're risking 5%, let me see if I can type it up here somewhere. So if you have like a $1,000 account, and then plus 5% equals 1,050. And then 1,050, and then say another 5%, you're going to be at like 1,102 or something like that. And then say you lose 5%, and I'll have to get the calculator because my math sucks. So let's see, we're like 1,102 times 5%. So 55. 25% is going to be plus 50 bucks. Plus 52 bucks. And then a loss right here would be like negative 55. And then that'd equate to 1,102 minus 55 would be so like right here in Nassim, so yeah, basically right here, if you win the first trade, you get 5%, which is 50 bucks. 5% of this is going to be 52, so it's going to be 1,102, and then you lose 5%, it's going to be a $55 loss, and then you're going to be dropped down to $1,000.47. Sorry, $1,047. And that's pretty much how it. Nassim said, okay, because someone said it's 5% of their account in a lot size. I was like, no, that can't be right because oh no, for sure not. Yeah, a 5 lot for a 1K, that's like they're risking like 500%. Like, I think so. So like it would be a 0.05 actually. If you're trading a $1,000 account, because technically you're supposed to be trading, so like proper risk management is like, it's a 0.01 lot size per $100. So if you have a $1,000 account and you're risking 5%, is going to be a 0.05, not a 5 standard lot. Because if you're doing a 5 standard lot, you're risking like, I don't know, I'm assuming that's like 500%. That's like more than it's than it even is. But yeah, you're I don't know who told you that, but that doesn't make any sense. But yeah, that's funny that you mentioned that, because that's a big risk. You know, 5% is going to be a 0.05, not a 5 standard lots, because I don't even think you could trade that. Well, I mean, if you're using like something with like 1 to like 1,000 leverage, then yeah, your broker doesn't give a shit. They're going to let you blow the account. But normally, like, I always recommend to use like, you know, low risk, because you never know when that bad trade's coming, and the bad trade always comes. Like, there's no way to like really avoid it. But yeah, I don't know. That's pretty crazy. All right, Wayne, sorry. I'm gonna get back to your question. So this is what I was just talking about. Here, let me just go to a clean chart, because I don't want to have all this mess on there. So I'll go here to a year CHF, and then I'll just put this here. And I think this was the same trade we were looking at. So let's replay it to this point. And this is a way that you can do it, but I don't recommend you do it unless you're really good at scalping, because you have to be super quick. Like, you can't be messing around. You have to be like fully focused 100%. So right here, this would be a valid entry for the full move, right? For the pivot entry. So if I go back to the, I'm just gonna grab the requirements. There we go. I put them here somewhere. So there's the requirements right there. Identify the trend using the K2 pivots. Price is below the pivots right here. So obviously price is trending down. Next, identify a retracement. So price was coming down right here, and then it retraced from this point, or it retraced from this point right here. So price came down, established the bottom right here, retraced upwards, and then next you identify the rejection. So price rejected from the pivots up here, and then it came down. Once you had the sell signal, this would provide for a valid pivots entry. So say you're in this trade already, and then you're just running it, right? So whenever price comes up, you can just enter, because the thing is, we're already anticipating price to come down already, right? Because this is our projection. We're projecting that price is going to come all the way down here, which isn't going to be, it's not always going to be the case. But if you're very confident about the trade and you want to scalp within it, you could, you can stack on, like you were saying. But this is something that I don't teach openly, because I do it because I know what I'm doing. But most traders, if you start to do this and you start to make a lot of profit, you're going to get addicted to doing this. And this has happened to me before. This is why I don't teach it, because once you make one mistake, you could blow your account pretty quickly. But here, I'll just show you like real time what it looks like. So price comes down, and you can see as price comes up right here to the pivot, I would just put another sell position, like a sell limit, like at the second pivot, like one of the first two pivots. So either the green one or the yellow one. So right there, I'd enter another sell position. So you can see price comes down, and then as it comes down, I have two active positions now, right? If price was to come up again, I put another sell position at the pivot again right here. So price is down right here. It comes over, it comes down, it hasn't filled it yet. And then it ends up coming up right here. So you can see right here that price spiked up right to this pivot. So there would be 3 entries there now. So you have 3 stacked entries right there. And then you could literally see, like, so for these right here, this one probably would have lost, or let me see, let me go back. Sorry, let me rewind it. And this is why I say it's super risky, because you have to know exactly what you're doing. So right here, and you have to adjust your stop loss super quickly. So as price comes down in profit, so let me just go back to the first one over here. So technically this first one over here would have been in profit. Let's see, about like 20 pips. So, once it reaches like halfway in profit, you should always move your stop loss to the 50% mark. So in case it shoots up, then you could get stopped out in profit. It's risk-free. And then you just enter the second position right here as it comes down again. Here, it's super messy here. So I'm just going to go over here and I'm going to show you guys what it looked like over here. So this entry over here, once this reaches half profit, you would have moved your stop loss in profit, and then you would have been stopped out. Again, right here for the next entry where it shot up, right here, you would have put your sell limit right here. And then as it came down halfway again to the halfway mark, you would have to move your stop loss. So as it comes down right here, you would have moved your stop loss right here and you would have been stopped out again. So that's like 2 wins right there for like 15 pips each. So in total, that'd be about 30 pips, right? You're already 30 pips in profit. And then again, right here, if you wanted to stack on top of that, so you wait for price to come down and then you wait for it to shoot up right there. And then you would have put your stop loss, your sell stop right there. And your stop loss has to be tight. You have to put it at one of these pivots right here. If you're doing this method, you have to be on point. Like you can't take your eyes off the chart because if it ever shoots up, you're going to get screwed. Like if your stop loss was too wide out here for like 33 pips and it shoots up, then you would have ended up with a loss instead of just, taking that one trade. And then you would have had profit from that one trade for like 15 or 30 pips. So you put your stop loss either at this pivot or this pivot. And then as price comes down again right here, so you can see we enter this trade at this point. Once price comes down halfway again to the 50% mark, you have to move your stop loss. So price comes down right there, you probably would have moved your stop loss. So if you moved your stop loss, you would have had 2 wins for or 3 wins, like 2 for 15 over here and then 1 for 12. So if you add those up right there, you have 30, you would have 42 pip profit right there, and you would have been out of this trade. But if you were to get careless and you don't move your stop loss, because you can see here how fast it moves. So right here, if you didn't move your stop loss and you're just like praying that it'll come back down, you would have ended up getting stopped out. And this is why I don't recommend the strategy to anyone that's new to trading or that doesn't know how to do this like by itself. Like if you can't do it with one position, you're not going to be able to do it with multiple positions. So I recommend you just stick to one entry at a time. But this is pretty much how I scalp it. Or what I do is I'll go on. So this is like even way more advanced. So basically what I do is I'll have this full entry right here on the 4-hour. And then I'll go on the 10-minute. And then I'll do that same thing I just explained, but on the 10-minute. So as price comes up like that, I enter another small sell right there. And then every time price bounces up, I'm literally just manually hitting like sell. And then as price comes down, I hit a close, and I'm literally just hitting this back and forth. So you can see right here that it keeps testing it, right? So every single time that it tests it, I just hit sell, and then I close my position once it gets around this point. Once I make a few pips, I get out for like 5 or 8 pips, and then it comes back up. I do it again, another 5 or 8 pips. It comes up again, another 5 or 8 pips. And I'm literally just staring at the chart, and I'm hitting buy, or yeah, I'm hitting like, the buy or sell button right here. Every single time I'm just scalping it. So as it comes up, I scalp it for like 5 pips. And then I just literally just keep doing it until I end up getting stopped out. And I'm like, all right, this is done. Like it's not going to move anymore. So at that point, I just move on to the next one. But, just like I mentioned, you have to be really on point. You have to really know what you're doing. So I don't recommend you do it, Wayne, unless like you're 100% sure how to do it. And I probably wouldn't do it on EC either. Like this is a bad pair to show it on because this is a slow moving pair. I would probably do that on US 30. So I'll show you again right here on US 30 how we do it on there. It actually works a lot better on there because the volatility is super high. So let's go back over here. Let me just see if there's any other questions. John said, can you owe more money? Can you owe more than the amount you have in your account if the trade goes badly against you? John, so that could happen if you're trading on margin. So if you're trading on, I know we talked about this before. If you're trading like on TD Ameritrade where they give you a margin account where it's loan money, then yeah, you could owe more than you lose. But if you're trading on a cash account where that's all of your cash, then you won't have to owe the money. because what happens is you get margin called out. So if you go too far in the negative, like you go 40% or 50% in the negative, they just kick you out of the trade. That way you're protected and the broker's protected too. Because the thing is, if they let your trade run and it goes super far in the negative, someone's going to have to owe that money. It's either going to be you or the broker. So depending on which broker you're using, you know, it could go one way or the other. So I never recommend using margin money, like a loan margin. I would only use a cash account, especially for trading, because you never know when you're going to get caught in some slippage and it's going to go like really bad against you. But yeah, Wayne, so let's check out US 30, because that was a bad pair. So I was showing you on this is a slow moving pair, Euro CHF. Like that, I was looking at it and I was like, dude, it's only like 5 pips. There's like no point in us even scalping that. But looking over here at US 30, so all right, so let's see. I'm just gonna line up a pivot entry over here. All right, so right here we got a pivot entry. I'll just go a little higher up here. And then let me see if I could, there we go, perfect. So right here on the 10-minute, you're gonna do the same exact thing I just mentioned, except you're trading it on a higher, like a pair that has higher volatility. So it's gonna be easier for you to get in and out of the trade. You don't have to like wait for it to really move too much. You can literally just scalp it each time. So right here for US 30, you're gonna identify the trend using the K2 pivots. Obviously right here, prices below the pivots, they're angling down and they're spread out. So this is gonna confirm a downtrend right here. So once that first requirement's met, you're going to identify a retracement. You can see right here, price came up, came down again right here. And as it came down, it retraced from this point, right? So price comes down, retraces from this point, then shoots up in this direction, and then it rejects off the pivots right here. So first requirement's met, we've identified a downtrend. Second requirement, we've identified the retracement right here. And the third requirement, we identified the rejection of the K2 pivot area right here. Lastly, we confirm a valid K2 sell signal right here. And it's valid because it's a red sell signal with a red bearish candle. So once all those are met, you can enter on the open of the falling candle, which would be right here, right? So this would be for the full move for about 1,000 pips. And then I'll just show you the full move first. So there you go, we hit full TP, right? So that's one full move. So we'd have about 1,000 pips right there. And then if you want to stack positions like we were just talking about, as price moves down, so once you're in this trade and you see the prices below the pivots right here, you can enter another sell position like right there, wherever the pivots are. And as it continues to move down, you just keep moving the entry with it, either right here or somewhere right here. It just depends on, you know, one or the other. And then as it continues to move down, you just keep trailing it, because, you know, price is eventually going to come up. And this is why the pivots are so good, because as price comes down, you know, price generally rejects off these pivot points. So, okay, this is a perfect example right here. So here are the pivots right here. You have your sell stop right there. I mean, not sell stop, a sell limit. Because if price is below the entry, then it'd be a sell limit to fill. So price probably would have filled our position. Okay, so this is actually where it would have filled. So it would have filled right here because price finally came up to the pivots, like you can see right there. It came up and touched it. So as it touched right there, it would fill your sell limit. And then as price comes down like this, you would move your stop loss. So right here, obviously, price comes down to the 50% mark. But as it continues down, it just goes to full TP. So you would have gone full TP right there. And then you can literally just keep doing it. So as price continues to move, see, but if it drops this far, then I wouldn't enter a pit, like I wouldn't stack it, because it's like way too far down. You know, if it pushes down too far, eventually it's gonna have to come back up at some point. But you can see here what I mean. So basically, this would be the full entry right here for the K2 pivot. And then again, right here, when price came up and touched the pivot, you could have entered another sell right there for another full TP. And then on top of that, there's another pivot entry right here, right? So you can enter a sell position right there. So you would have had 3 back-to-back wins right there. And then again, right here, as price comes up to this pivot, you could enter another sell limit right there. And then as it comes down, you know, it ends up hitting full TP again right there. And you could literally just do this. Like if the trend is super strong like this right here, you can take so many entries because you would have the pivot entry right there. You would have a stacked position right here. You would have another pivot entry right here. And then again, right here, as price comes up, you'd have another stacked position right there. And you can see that they all hit full TP as price comes down. Again, right here, you had a pivot entry with the sell position. And you could literally do this all day. You just got to make sure to move your stop loss. So as long as you move your stop loss and you at least stack up profits, like even if they're small profits, they're going to keep adding up, you know, at the end of the day. So if you kept taking these trades, see, like this would have been an entry. And then again, right here, as price comes up, you'd have another stacked entry right here. And then you got another sell signal right here. So this would be another pivot entry. And there's a whole bunch of entries here. So that's another pivot entry. And then again, right here, as it comes up, you'd have another stacked entry and then another stacked entry. And there's like, the list goes on, like literally. So right here, 1, 2, 3, 4, 5, 6. This could have been like about 6,000 pips right here if you just kept stacking them on top of each other. But if you're stacking them, you always have to remember to adjust your stop loss, you know, because the key here is to scalp it. If you're going to be stacking entries, your key is to scalp it. You don't have to reach full TP each time because you're going to be entering so many different positions. So, you know, say your full TP is like 1,000 pips. You can pull out about 200 pips, 300 pips, you know, even less than that, because you're going to have so many opportunities to just keep redoing it back to back to back, so that instead of like hitting like 300 pips each times like 6 entries, you'd have like came up with 1,800 pips. And then it adds up eventually. And if you take no losses, you know, you take this all home. So it just really depends on how you want to trade it. But, you know, like I mentioned, I wouldn't recommend, do this on demo first, just to get like really comfortable. And then once you're super comfortable and you're like ready to go, then do it on live. Because the thing is, once you're on live, what happens with a lot of people is they freeze up. So, you know, if you get your entry right here, so say they enter like a sell limit right there because it came up to the pivots, and then it drops, and then people usually freeze up. So as they see this happening right here where it's shooting up, you should have already exited the trade somewhere around here, the halfway mark, right? But some people freeze up and they're like, crap, I'm stuck in this trade because it's like way up here. But if you were to, like, say if you were to exit right here, you could have re-entered somewhere around here, and then you would have had 2 profits instead of you just hanging on to this and not knowing what to do. So I definitely would recommend you practice first and, you know, get the hang of everything before you actually do it live, because this is going to move super fast. Like, it looks like it's moving slow here, but when you're doing it real time, it's going to move super fast. Let's see, Wayne set on that 3rd position. Price didn't touch. Oh, never mind. Okay, so it looks like you saw it. So yeah, basically whenever price comes up, so if you're already in a sell right here, as price comes up and touches the pivots, you can enter another sell, and then you can enter another pivot entry, and then price comes down, comes up, another sell somewhere around here, either right here or right here. And then once you get a sell position again right here, enter a sell, and then another one right here, another one right here. The list literally goes on. And then it just keeps going down. So like, check this out. If you did this for the entire day, let's see how long this draw for. Yeah, see, you would have hit like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So probably like 10 wins. So 10 wins, that's about 3,000 pips. And then you probably would have lost one right here for like 500 pips, because the entry would have been, or actually you probably would have won this right here, because like I mentioned, as long as you're moving your stop loss, which would be like the halfway mark right here. So once price reaches this point, move your stop loss to that point to get out. So you probably would have still profited off this too. But then if you wanted to keep doing it and then you entered right here, you probably would have lost here for about, let's see, for about 700 pips max. So you know, if you add all those up, you have like 11 wins times 300 pips. If they're scalp moves, you'd be up 3,300 pips, and then you lose one trade out of those 11 trades for 700 pips. You're still up 2,600 pips. So, you know, it becomes a numbers game at this point. Like if you're scalping, it's literally about managing your risk, taking your profit, and making sure that you don't take any losses. If you're going to take a loss, it's just going to be that one loss, and then you're out for the day, or for, you know, whatever session you're trading in. But it works in a lot of ways. Like, you know, it works right here, and this literally, let's see how long did it last for. It went for like 15 hours. So if you can stay at your computer or your phone or wherever you're trading for like 15 hours, you could have, you know, racked in all of these trades right here. And then once you lost right here, you're like, all right, I'm done. So you've been on your computer for like 14 hours already. So it's, you know, it's about time to take a break. And then you go do your break, and then you wait for the next time to take these entries, and then you're back at it again. But you would only so this is one thing to keep in mind too. You're not going to run this strategy, or you're not even going to run the pivot strategy if the pivots are crossing over like this. Like if it hasn't established a clear trend, you're not going to force any trades. You're going to trade when it's like trending heavy. So this is you can see the huge difference here. Like right here, you can see it's a nice trend, like it's a heavy trend down. But if you start seeing the pivots cross up, because I know this is an issue with a lot of people. They like to force trades, and once it starts crossing up like this, there's no trend there, unless it's like way up here, and then you get a pivot entry. But there's clearly no pivot entry there, and you can see the pivots keep crossing over right here. I know a lot of people like to force trades once it gets into like this little consolidation phase right here. But you know, you can see clearly here that there's no trend because it keeps crossing over until it breaks out into another strong trend. Like right here, this would have been a good entry if this was a valid sell, but it wasn't. You know, it's obviously not a valid sell signal, and then price just skyrockets upwards. And then at this point, there's no valid buy position right there, so we skip that. And then right here, so at this point, there is a valid buy position. So if you were to apply the pivot strategy, so this is what I mean. Right here, it's a nice trend down. You can take all of these sell entries right here. Right here, it's crossing over like way too often. So this is not considered a trend in either direction. But as price crosses up right here, you can see that it's trending up pretty nice. So if you were to see this right here, you would have entered this position. And then you could have been entering that, you know, that stacking method that I just mentioned. So right here would be the full position. And then as price comes down, like, you know, somewhere over here, then, or not there. So like somewhere like over here, you can have like a buy limit, and then you can enter a buy from there. But like I mentioned, you would have to practice this on your own, because so the problem is if you have a question while the trade's live and I'm not able to answer your question right away, you're not going to know what to do. So I recommend that you probably go on, you know, on demo first, and then just practice it. And then once you're super comfortable, then go ahead and apply it live. But just always remember that risk management is always going to be key. That's going to be number one, you know, no matter what strategy you're applying. But yeah, guys, so that's it for that strategy on US 30. I'm not sure if you guys were looking for anything specific, because I know a lot of people wanted me to go over the pivot strategy, but I kind of went over it this entire time already. So I'm not sure if anyone has any other questions. If you guys do, feel free to ask, and I can go over any questions you have. Otherwise, I'm just going to go back to the our watch list, because I stopped on odd NCD, and I'm just going to see if there's any other entries for us to take once we reach 6 p.m., which is the next 4-hour candle close. But it does look like we have news coming at 7. So actually, I don't know if we're going to be taking a trade at 6, but it's for sure not going to be for any of the Aussie pairs or NZD pairs, because the news is probably going to affect it pretty heavy. Let's see. Yeah, it's the RBNZ rate statement, which usually affects the market kind of heavy. Oh, nice. James said that he scalped 235 on US 30 in 10 minutes. How are you scalping it, James? Were you doing the pivots? Yeah, so if you scalped it all the way from here, looks like, oh yeah, no, definitely. So James scalped US 30 right now. He made 235 within the last 50 minutes. So like pretty much what I just explained right now, as price is coming up, literally when it comes down, you can just take a buy. So like right here, price is obviously trending up. As price comes down and touches the pivots, you can just scalp it. Like you could manually enter a buy, and then as it pushes up, just close the trade. And literally, like every time it comes down and tests the pivots, like right here, it tested it again, right? So if it tests it, enter another buy, and then once it pushes up like that, you just exit and profit. As it comes back down, enter another buy right here. It shoots back up. You exit that position when it goes up here, and then you're out. So you would have made like 20 to 50 bucks there, 20 to 50 bucks there. Again, right here, it came down. You would have had a buy order, shot back up, another 50 to 100 bucks there. And then literally you can just keep doing it like literally all day because you can see how many times it touches. Every time it touches, it counts as an entry. Yeah, James, you can use a trailing stop too. So that's actually a smarter way to do it. The only problem with the trailing stop is if your spread's too wide, you might get kicked out of the trade in the negative. So I would only use a trailing stop if your spread's super tight. Otherwise, I would just do it manually, because then you can see, like, even if you're on MT4 and you're just watching the chart, you can just hit like hit a buy order on your phone, and then enter the trade. Once it goes into profit, close it out. Once it comes back down, enter another buy order. Once it goes up, close it out, and literally just keep doing that over and over again. Nice. So yeah, James said that he does it on the 1 minute. That's actually how I do it. So what I do is I'll set up the trade. So like, say if I was entering this trade right here, I would enter a long position right there, and then I would go on the 1 minute, and then I would do exactly what I was just saying, but on the 1 minute. So it comes down, enter a buy right there. So I literally just wrote this up. So it comes down, buy limit right here, write it up. Same situation again right here. It comes down, buy order, write it up. And it's really simple. I mean, you could, like, what I always base it off is base the entry off the normal time frame, like the 10 minute if you're trading US 30. And then once you have the trade set up, you can just go down on the lower time frame, like the 1 minute or the 3 minute, like James is doing. And then you can literally just scalp it every time it comes down, just take a buy and then just manually write it. And that's basically how I know you guys are familiar with like that one time when I forgot about my FTMO, and I was like it was going to expire because I had like 1 day to make like 10K in profit. I think I still have it in here. Let's see. I think it was, I don't know, was it this? Yeah, it was a little farther back, I think. Actually, that might be it right there. Yeah. So basically, what happened was I didn't realize that my FTMO, like my deadline was due on like the next day. So like that morning, I was like, shit, I got to make 10,000 to pass this FTMO. So what I did was I started off with like 1,800 right here. You can see this, the profits are smaller because normally when we take the US 30 trade, my profits like normally around like 2,200, like 2,250. But since I was scalping it, the profits were smaller, like 150, 700, 600. And I just kept doing that literally back to back. So right here were the full moves. You can see obviously I over leveraged like crazy because I had 1 day to pass. So instead of the 2,500, I was making like 3,000. And then after that, I just kept scalping it. You can see the profits get smaller and smaller. It's like 800 right there, 700 right there, 200 right there. So like literally this entire day, I was doing what I just showed you guys. See, these are all wins, literally back to back, and they're all on the same day. See, on the 24th, 25th, I like literally just scalped and I did the same exact thing I just showed you guys, like the entire day. So I took like 2 full positions and then I scalped within. So I made like 800, 700, 200, 700, 800, 600, and then 2 more like half positions to like 50% profit. And I literally just did that until I reached like 12,000 because my goal was 10,000 to pass FTMO, and I did it in 1 day. Because you can see here all the trades are on the 24th at night, and then because this is when I realized. So it was like 17. So this was like I guess like 8 p.m. at night, and then I just realized that my FTM was due the next day. So like from the 24th until the 25th, I just took full positions and then I scalped within it until I hit my goal, and then that's how I passed FTMO, within a day. So it's a very strong method if you know how to do it properly, but the real key is not to get greedy. Like when I mentioned you have to exit once it goes into profit, just take the money. Like there's no need for you to go for like huge wins because it's not 100% necessary, especially if like you're doing FTMO challenge and you're only required to hit like 10,000. Like I could have literally kept going, but I hit 12,000. I was like, there's no point in me going because I'm still like in the verification of the challenge or whatever. But yeah, guys, so if you guys want to scalp like I do, that's pretty much how I do it. Super simple. But yeah, James, going back to your question. So I was just, I touched on it slightly earlier about, the trailing stops. If yours, like say if your spread's like 3 pips, right? Then I'd probably trail it by like 5 pips. So that say if you enter this trade, you'd be like down, your trailing stop would be right here. And then as it moves into profit, it'll slide with it. Because the last thing you want to happen is you enter a trade and it spikes down and then you get stopped out and then it ends up shooting right up like it did right here, which happens all the time. That's why I personally stopped using trailing stops. I just do it on my own now. So I just do it manually because price just moves way too fast. Man, I kind of feel bummed that I didn't take this trade. It looks like it's about to hit full TP. All right, cool. So let's see. Yeah, I'm just gonna go down the pairs again. If you guys have any other questions, feel free to let me know, and then we can, go over any questions you guys have. Otherwise, I'm just gonna go through the, our active positions and down the watch list to see if there's any entries. However, there's news at 7 p.m., which is in about a little under 2 hours. So I'm probably not gonna call any trades until this is done because the NZD and AUD news tends to affect like pretty much all the pairs. So here's AUD USD. It's looking all right. Like I mentioned, it's just going to move slow during a Asia session. Cad CHF is shooting up pretty heavy. Cad JPY. So this might, I mean, it could technically qualify as a buy entry if we were to use the the zone strategy, and then pretty much just write it up. However, the trend is trending down so heavy that I wouldn't want to go against it. Because what might happen here is price might go up temporarily, to this pivot, and then it'll probably reject right off it and then shoot down, kind of like what happened right here. And that's normal. It's super normal. So although this isn't required for the zone strategy, I do still use it just to make sure that I'm not trading against the trend, or at least against a heavy trend. So this is our CHF JPY positions. It's still active. We're just gonna have to give it some time. I think it's gonna reject off this zone right here and then continue back down because the last signal was a sell signal. So it's still gonna confirm that, the momentum is still gonna be coming down. So that's good. Euro auto over here. I think this was a zone, but it was like a standalone zone. So yeah, right here you can see price is trending up pretty nice. So like if price was to shoot up here, then I would take a buy position. Once it reaches there, I'd probably put my TP1 somewhere around here so that if price was to come up further, and then if it was to reverse on us or reject off it, we get out in profit right there. So I can't stress it enough, guys. Like risk management is always going to be key, and you guys always have to analyze each trade from both sides. Like for right here, even though price is trending up so strong, and odds are price is probably going to go up further, you always have to just keep you know, the idea that it's not going to always go your direction. It's not always going to shoot up like this. It might just come back down, just so that you guys, so there's no surprises. You know, I know a lot of people take trades and then they're like surprised that they lost a trade. They're like, how could this ever happen? But the thing is, if you go back and you would have analyzed it, you know, both sides, you probably would have been able to spot that it was a risky trade and that it was, you know, more likely than not to reject on you. Let's see, Euro CHF, nothing there. Euro GBP, this is coming up right here. It's probably, so you can see right here, it's kind of similar to what I was just talking about. Price came down to the pivots, and then, you know, what's going to happen here is probably going to reject off it. And it has like a double confirmation because it has the confirmation of the pivot rejection right here, and then it'll have a rejection off the zone as well. So it really depends. Euro JPY. I think this will continue down. So this could have been, you know, another stacking entry too, as it, like, you know, touches this pivot right here. Because if you took these trades right here, I don't know if Wayne's still here, but Wayne, if you're still here, like, this is the same thing I was just talking about. Like, price comes up. If you had a sell position right here on the pivot, you could have wrote it down. And then there's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's like 10 entries right here. Also because this is on the 4 hour. So, you know, this provides for a lot of opportunities that you can take. Let's see, Euro NZD, nothing there. And so, like, the reason why I don't see anything here is because it's at these, it's within these zones right here. So like I mentioned, whenever it reaches these zones, it might just consolidate a little bit until it like breaks above it, or it comes back down and shoots below. So it's just a little too risky. Let's see what we got next. Euro USD, same situation right here. It's, you know, it's stuck within this zone right here. So it's either going to, you know, break above or break below. So I'd have to wait for that to happen. This is a tricky pair because the euro is weak, plus the US dollar is overall weak. So I don't understand why it came down so heavy. But, you know, obviously with the Fed speaking every day this week, they're obviously making the US economy look better than whatever pairs they're paired against. So that's why this came down since, let's see, yeah, since Monday. So since Sunday, I mean, right here, it just literally just came crashing down. So it's going to be a manipulated pair, at least until the Fed's done speaking this week. GCAD right here, this looks like it's going to come down. So technically, this would be an entry right here. But we do have the news coming up soon. So that's why I'm kind of wary about taking any of these trades. All right, cool. So, I mean, technically this would be an entry here. I don't know if anyone took this, but this would be a zone entry right here if you're using the zone strategy. But I didn't call it because there's news coming up. So I'm going to hold off on that for now. GC looks like it's coming down as well. So it looks like the pound is pretty weak across the board. Looks like everything's except for GA. So for GC, it's coming down. For GCHF, it's coming down as well. GJ also coming down. It just looks like the pound is pretty weak overall. You know, especially from the news last night, I think, or this morning, was it? Yeah, midnight. So ever since midnight, you can see right here, this was midnight. It like tanked like super hard and then just continued down. I really wanted to enter this sell right here because this is considered a zone entry as well. So this is a zone entry, but I found it to be a little too risky because, you know, generally when price drops like that, like this heavily, it's going to have to come back and correct back upward. So like right here, you can see as soon as it dropped, it came back up and it got close to this stop loss right here before it dropped down. And that's one thing that you guys will see, like with my trading style and like with other trading styles, is that I'm very conservative. Like, you know, I'm more focused on not losing and keeping a high win percentage versus, you know, taking these big wins. Because like a lot of people are like, you know, you can literally just ride this down. If you wanted to, you could have rode this trade like all the way down. But me personally, I just like to trade when I have an edge. So like once it reaches this zone right here, I personally probably would have exited. So once it reached the zone right here, I'd move my stop loss, and I probably would have got out in profit with like, you know, a third of the profit or a fourth of it, versus just holding it and waiting for it to come down. Because especially during these market conditions, it's just a little too risky for you to really hold something long term, because you never know when it's going to just reverse on you. Like right here, this could shoot right back up, but we'll never know until it happens. GN. So this was an entry for GN as well, but I'm not going to call it because there's NZD news coming up in about 2 hours. I was going to call this GU trade earlier too, but like I mentioned, when it drops this heavy, it usually has to shoot up a little bit to correct, like even if it's temporarily. Let's see, GCAD. GCAD's dropped down pretty heavy. It looks like all the CAD pairs are dropping. So GCAD, your CAD, yeah, it looks like the Canadian dollar is really strong right now. Could you see the correlation here? So GCAD's coming down, your CAD's coming down, GCAD's coming down. Wow, yeah, they're all coming down right now. So it looks like here, let's look at the opposite. So basically, if the Canadian dollar is the second currency within a pair and price is going down, that means that the Canadian dollar is stronger than the first currency. So for odd CAD, it's coming down. Canadian dollar is strong. What else is here? Your CAD price is coming down. Canadian dollar is strong. And then lastly, you know, GCAD right here, price is going down, so the Canadian dollar is stronger. Let's look at the opposite. Cad CHF is going up. If price is going up, that means the first currency is stronger than the second. So right here, the Canadian dollar is strong against the Swiss franc. Same with right here with Cad JPY. I don't know what's causing it to go up right now. I'm probably gonna check the news because I don't think I saw anything causing it to come up. And then right here, same for UCAD. So UCAD right here is coming down, so it's indicating that the Canadian dollar is strong. Let's see, news. Yeah, I don't really see anything for a Canadian dollar unless like there's like other news that's just affecting it. House passes a government-wide temporary funding bill. No, that's not Canadian. Economy doesn't need more stimulus for a V-shaped recovery. Yeah, I don't know. I don't know what caused the Canadian dollar to be so strong, but it looks like, you know, something's obviously pushing it because all the CAD pairs are going in its direction. Ah, interesting. Okay, so I think that's it for these pairs. I don't really see anything else for us to take right now, and especially because there is high impact NZD news in about an hour and a half. So when that happens, it's going to affect majority of the pairs. It's for sure going to affect all of the AUD pairs and the NZD pairs, but it's also going to affect, you know, the rest of the major pairs as well. So we'll probably hold off on that before I take any other like new entries, but we'll probably just sit tight until then. Let me see if there's any. Man, I feel so dumb for not taking this trade. So this was a pivot entry right here. When did this appear? Oh, it appeared like at 4:20. So I was already on this live call. So guys, I think probably sometime next month I need to get situated because I'm moving to a new location at the end of next month. So I'm doing a lot of like organizing and planning to move all my stuff over. So once I get all moved into that location, I'm going to start doing scalp sessions because I'm gonna plan on scalping again. So I'm gonna be scalping US 30 probably during US session. So that'll be fun. I'm sure you guys could just piggyback my ride, my trades pretty much, because it's gonna be super quick. So literally, I'm gonna be on live, and when I take a buy, I'm just gonna yell it out like, oh, take a buy here, take a sell here, and then I'm going to tell you guys when I'm exiting trades. So like literally when I say buy, you guys can just buy with me. When I sell, you guys can sell with me. And it'll help all of us out. You know, it'll be fun because I feel like, you know, the market got kind of slow and it got kind of boring for a bit. So I think, you know, once we start scalping together, I think you guys are going to be super like super pumped in the mornings again. I mean, yeah. So like this week we have the Fed speaking every morning. So they spoke on Monday, they spoke today, speaking tomorrow, and on Thursday. So this is why we're not taking any US 30 entries in the morning. I know you guys are used to me calling the New York session entries, but unfortunately, there's just too much. There's too much going on. You know, it kind of happened today. So like right here. So instead of taking the US entry today, I actually took the London entry, which is surprising because I never stay up that late. But I know some of you guys took this entry and some of you guys got out in profit, but some of you guys ended up holding on. Oh, I don't know if anyone hung on to it, but I know if you guys did, it would have hit stop loss. But like right here, so this would have been the entry. So actually, no, it hit full TP. Wait, am I tripping? I don't remember. Oh, because I wasn't even watching it. My bad, guys. So like, I remember. So we called this in the morning, or I shared it with you guys. Oh, I didn't share it in the official, but I did share it in the trade talk. So we were looking at it. I know Stanley took it. I don't think Stanley's here, but yeah. So I shared it with you guys here. There's the US 30 entry from this morning. You know, it's the same entry that we took over here. I kind of wish I took it, but you know, like I mentioned, it was just too risky today with the Fed speaking. So like right here, this would have been the entry, and looks like it came down, hit full TP. So that's pretty nice. Instead of taking that, or actually no, this is the 5 minute. That's why. Okay, so there's where we. But it's oh no. Okay, so actually this is correct. So we didn't reach it. So on the 10 minute right here, I know Stanley got out in profit. I know majority of people got out in profit, but if you hung on to it, it ended up shooting up in the opposite direction. See, James said, so you're waiting for signals to close on the 4 hour before entry like you normally would? Yeah, James. So James, for the currency pairs, pretty much for all the signals that I call, I'm using the K2 zone strategy and the K2 pivot strategy. So those are the two main strategies I use for Forex. And then I was pretty much just waiting for it to close. Like right here, I probably would have taken a buy, but I didn't because there was news this morning. This is when the Fed was speaking, 6 o'clock. But yeah, Dominic, yeah, you're right. This was the actual entry, and this is why I'm glad I didn't take it because this happened. Because obviously, you know, the Fed was speaking, so like in the morning, price came down, and then it got really close, and then it ended up reversing super hard. So I'm glad I didn't take that trade. But I know Stanley who took it. So let's see, Keith took the S&P entry. Yeah, so Keith took that one, the S&P. He took on the 10 minute. He hit that. Stanley got stopped out at TP1, which is perfect. You know, that's what I always emphasize, that you guys have to move your stop loss. So he probably got out somewhere around here. But, you know, if you didn't move your stop loss, it would have went negative on you. But yeah, so yeah, Dominic mentioned that it didn't hit full TV. Unfortunately, it didn't. And this is why I'm glad that I didn't take it, because when the Fed speaks in the morning, like this is what happens. So the Fed will say something, price will go in one direction. The Fed will say something opposite, and it just ends up shooting up like hardcore reversal. So that's why I didn't take this trade during New York session. During the New York session, but I did take the London entry. So this strategy works during London too. So London opens here at midnight, and then nice. Dominic said he took it, and he got stopped out at 75 pips. That's perfect. I mean, you know, profit's profit, especially for this. I'd rather take that 75, that, you know, the halfway mark where you got out, than risk the full loss right here. So you just got to be smart. If you guys are trading during like highly volatile times like this whole week, you guys got to make sure to eliminate your risk. As long as you eliminate your risk and eliminate the losses, you guys should be good, trading long term, because you're just going to be consistently profitable if you end up doing that time and time again. But yeah, so back to the same strategy here. This is the same strategy, but for London session. I'll put the requirements here for the new people. This is the K2 daily US 30 strategy. So one, look for trades after 12 a.m. Pacific Daylight Savings Time, London, or 6:30 a.m. Pacific Daylight Savings, New York. And then next, identify first valid K2 signal. Third, enter open following candle. So last night was like an outlier. Like normally I'm not up this late, but it was like midnight and then I was still awake. So I saw the buy entry right here. And I think me and Marcus called it at the same time. So let's see, I called it. Yeah. So I called it and then Marcus literally called it at the same exact time at 1:01. And it was just funny because Marcus normally calls it, but I was awake at this time. So that's why I called it as an official entry. And I actually gave this trade out to you guys for free. I gave it out to everybody. So I gave it to the premium. Obviously, the premium always gets my trades, but I also gave it out to the public group too. So I think I shared it here as well. Yeah, I shared it right here. So I shared the London session entry right here. I was like, here's a K2 premium freebie for you guys, and I'll try to do this like at least once a week. So I know a lot of you guys want to join premium, but you guys are still on the fence. So once a week, I'll give you guys a real-time trade, just like I give everybody in premium, just so you guys can get a taste of it. But yeah, basically right here, look for entries after midnight, which is when London opens. So London open right here. We have the first valid K2 signal right here. We enter on the open of the following candle, which is right here, and then we let it run. So like I took this trade, I went to sleep, and I woke up with a full TP. So it played out nice. And this is why I took it during London, because the FOMC, the Fed, wasn't speaking until later this morning. So the Fed started to speak around this time. Let's see, 7:30. I'm just going to mark it up right here so you guys can see. So let's see. Yeah, so Fed Powell started speaking at 7:30. So right here, you can see that price was going up. And then this is the US session where it came down a little bit. And then see, you can see, this is how you can tell that this drop was because of the Fed. So like, let me just take everything off. All right, so this is London right here. Price is going up. This right here is when the New York session opened. So the New York session open is going sideways. And then the Fed started speaking right here. This is when Powell started speaking. And then as soon as he started talking, it came crashing down. And then I think it was going between Powell and someone else in the Fed that was speaking. So once Powell said something, it came down. And then as soon as the other person said something, it just skyrocketed up. See, and this is why I don't like to trade this during heavy news or like when something's going on, because this will happen. Like Powell starts speaking right here, and then let's see, 20, 30 minutes later, it just skyrockets the other way. So it's like super highly manipulated, and it's just hard for you to really gauge where it's going, because normally this strategy is super accurate. It's just when there's news going on, it's gonna push price up and down like crazy. So I would just be really careful if you're trading this week, like especially more specifically during the US session. So London tonight, it's going to be pretty messy. We have news at 12:15, 12:30, 1 a.m., 1:30. So literally right after London open, the first 2-3 hours are going to be crazy. So I would just be careful. And then again in the morning, the Fed speaking, plus you have PMI, we have the oil inventories. It's just going to, it's going to be crazy tomorrow. The entire day tomorrow is probably going to be pretty crazy. So I'm probably not going to call any trades until like maybe 10 a.m. once all this stuff is done. And then Thursday we have some news as well, but it's not going to be as crazy as the other Tuesday and Wednesday, because people usually pull out of the market before, you know, we hit the weekend, and then it'll probably slow down once it hits like midday Thursday afternoon. But yeah, guys, so let me see if there's anything else. Just gonna look at US 30, my favorite pair. Let's see if there is another entry. So this is cool right here. It looks like we're getting a crap. Let me take this off. Nice. Roscoe said he's scalping. Scalping is paying off on the gold. Let's take a look at that. I used to trade gold a lot before until I got burnt. Like a lot of people, you know, gold's a fun asset to trade until people people get burnt. Let's see. All right, before I go to gold, I'm gonna look at US 30 during Asia session. So Dominic, so before I was testing it on Asia session, but the problem with the Asia session is that the volatility is super low because there's, you know, obviously the US 30 is a US asset. So if you were to scalp during Asia session, I would probably do the Australian 200. Because, you know, you can see obviously right here, it moves super nice. Oh man, there's an entry right here actually. So guys, when I start doing live scalping, I'm probably gonna have all of the indices open. I'll have like multiple windows open right here, like maybe 4 or 6 windows. And then I'll just have like all of the popular indices. So we can, you know, we can scalp the AU 200, the NASDAQ, obviously, the S&P, and the US 30. But yeah, so Dominic, if you plan on if you want to you know, apply the strategy, I would do it on the Aussie, because on the on the US 30 it's a little choppy. So I'm just gonna back test it for you right now just so we can like look at it. So I'll just pull back every time it was like at. And the one thing with me too is like I get confused where should I base the entry, because like for London, I know it's midnight, obviously. For New York, I base it off 6:30 because that's when the stock exchange actually opens. But for Asia session, it's kind of hard to gauge if we like base it off the Aussie Open or the Tokyo Open. But let's give it a shot anyway. So like right here, I think it's like 16. So like right here, I guess this would be considered the Open for Asia. So if you were to take this right here, this would be the entry, and it looks like it technically would still be active right now. But I haven't tested it far enough. Like I've tested London and US to know that it works very well. But for the problem with the Asia session is that this market is a lot more choppier, and it just goes sideways during Asia session. It's not very directional like it is for the other US and London session. But I mean, it wouldn't hurt for us to just check it out. All right, again, right here. Looks like this would be the entry. Actually, it looks like it would eventually hit. But see, here's the problem. With the US session, it usually hits within that same session. And then same with the London session. The problem with trading during Asia session, like I mentioned, it like just goes sideways. Like you can see here, it goes pretty back and forth, but for the most part, it goes sideways. And it doesn't hit full TP until like 8 a.m. the next day. So like technically you'd be holding this for like 10 or 12 hours. And I personally just don't like to trade like that, especially if I'm trading US 30, because it's such a highly volatile pair. Like see right here, price went down. I probably would have gone stop down profit right here. But if you were to hang on to it, I'd be sweating once it got up to this point. I'd start sweating once it gets up here. And then I'm like, all right, cool. And then like in the morning, it hits full TP. So technically it does work, but I don't know how accurate it is because I haven't really tested it myself. But you know, who cares? Let's go back and just test another one just so we can see, because we don't really have much else to look at anyways right now. So we might as well just show you guys a blueprint to kill US 30. So right here, Asia session opened. Wow, this actually hits pretty well. So I never really looked into it. I looked into it temporarily, but it does look like it actually hits. But here, like I mentioned, see, like this would happen at what, 4 o'clock? It would take how many hours for it to hit full TP? It'd take about 5 hours. So I'm used to it. I'm used to it hitting within 2 hours. But if you have the patience for it, it looks like it does work pretty well. So let's drop it back to the previous day again. Wow, I'm like mind fucked right now. Dominic, why didn't you ask me this before? Check this out, man. Wow, look at that. How many back-to-back wins do we have right there? Wow, 1, 2, 3. So literally 3 days back-to-back-to-back straight wins during Asia session. Go figure. Man, who would have thought? I mean, yeah, it looks like it takes a little longer for it to hit. I mean, sometimes it's faster than the others, but so this was like 2 hours. This is about like the same as it moved for US session in London. But it looks like it's not as manipulated as it normally is. All right, so right here would have been a bad trade. I don't know if there's something going on the 16th. Let's see. So this would have been a buy. Looks like we would have gone stop down on this one. So you know what happens, but as long as your wins outweigh the losses, then I don't see a problem with it. Let's go see if there was okay, so there was news on that day. So there was Aussie news at 6:30. That's probably what probably would have affected this and caused it to spike down like that. So we probably would have skipped this trade, but let's go back a little further. I'm just really curious now because we saw like so many back-to-back wins. Maybe it's something that we should incorporate. Because I know I was using this for a while, but then I stopped doing it because it just wouldn't be very, very accurate. Yeah, so it doesn't, I don't think it's as accurate as London or US, and that's why we don't really use it as much. All right, cool guys. Our odd USD just hit full TP, 55 pips. Let me just post it up real quick so that everyone can celebrate. We've been holding that for a while. Okay, cool. So that looks good. Whoops. Send you guys the update for odd USD. Cancel this because we're not hitting no stop losses. Full TP already. Yeah, Dominic said I looked at it a bit and often hit TP at London Open. Yeah, that's what I was thinking too, because I know like a couple months ago I was calling those trades until I realized that it wasn't like as accurate as I wanted it to be, and that's why I stopped calling them. But it looks like they still hit, so maybe we could keep calling them, but just be a little more careful. How many pips was that? 55 pips. Let's see if we got one that I already posted, because I'm lazy. All right, there we go. Odd USD, full TP. And I think, yeah, I shared this with the public too, so I'll just give you an update over there as well. But yeah, okay, so that's good. Let's go back to US 30. I'm just gonna pull back a little farther. We'll like look at a couple more days and then we'll call it a day. And I'll look at gold real quick because I see Roscoe is over there scalping that. Man, every time I hear you guys scalp, it makes me jealous. Kind of makes me want to get back into it. I just don't like being at the computer all day because it does take a toll on you, especially if you're just sitting there. All right, so right here is another sell. Yeah, so it looks like it okay, so it was, let me go back a couple more days. I'm just gonna see how often does it hit, because if it's not accurate, then there's really no point in us really applying it. But yeah, it looks like we might have to change the entry time. So the time right here, I have it at 1600 hours. And it looks like, if we would have pushed the entry back a few more, like maybe 20 minutes later or 30 minutes later, it would have been a buy and we could have hit a win right there. Again, right here, if it was just a little farther off, maybe 30 minutes, we would have taken this buy instead and we would have won. Same situation right here. If we just pushed it back like 30 minutes, a buy right here, this would have won as well. So that's the whole point of you know, back testing it and figuring out what type of inconsistencies that you can see in the market. Like right here, you can see that it doesn't hit. Yeah, same situation right here. See, if we just pushed it back a little bit, let me see. Or maybe even an hour, 2 hours, it would end up being this sell right here instead of this buy. But then it's a double-edged sword, because so you can see here more recently, you can see that it actually hits, but the entry is like right after it. Actually, let's see how much does this move up right here. This would have hit half TP. Yeah, this is something that I would have to back test a little more. I know I started my back test a while back, but I never really finished it, especially not for the Asia session, because I just didn't find it to be too lucrative. But you know, US 30 is my favorite asset to trade, so maybe I should go back and just take a look further back. But yeah, that does look good. You know, if we make some little tweaks to the strategy just so that it conforms to the Asia session, but you know, overall it still looks fine. Let's see, Samuel said, what lot should I take with a 3K account? So Samuel, so if you're trading US 30, you should be trading at 0.01 per $1,000. So if you have 3K in your account, the max you should be trading is a 0.03, depending on your broker. So if you're using like Hugo's Way, or I can't think of any other brokers that people trade US 30 on. I know people trade on like CoinEx and my FX Choice, but I'm not familiar with those brokers, so I can't really tell you what the valuation is for the lots. But if you're trading on Hugo's Way, then your max lot size should be a 0.03 for Forex. I mean, for US 30. And then for Forex, you should be trading a 0.01 per $100. So your max lot size would be a 0.30 for Forex. But then that could vary, you know, depending on the pair and you know, depending on which asset you're trading and on what time frame, because your stop loss is going to take consideration as to like how big your lot size would be with regard to your risk. But all right, so let's just go check gold real quick since Roscoe is trading it, and then I think after that, unless we have any other questions, we'll probably call it a night. You know, we've been on for a little over 2 hours now, I think. But it's fine. If you guys have questions, you know, feel free to put them in the chat, and I'll stay on and answer questions. I'm available. It's just, you know, if there's no more questions, then we probably get off, and I'll just hop on the chat with you guys. But let's check this out. So here's gold. Nice. Yeah, it looks like there's a bunch of scalp entries here. So I don't know. Let's see. So yeah, price was kind of trending down right here. So these probably would have been some nice sell entries right here. So that would have been nice right there for 400 pips. And then again right here. Yeah, I mean, gold's kind of messy. Like I like trading gold, but I just feel like it's super risky because you can make a lot of money trading gold. You could also lose a lot of money. So as long as you're doing it properly, you should be fine. So like right here, another sell. Right here, another sell. Wow, yeah. Whoever's scalping gold right now, hitting those TPs. John said you can trade on CoinEx. Yeah, John. So I'm not familiar with it, but you can ask in the chat. I know there's a couple people in there. I know Ben uses it. I'm not sure who else. But yeah, you can probably ask in the chat, John. I know there's a few people that trade on CoinEx where you can trade indices, and CoinEx is one of the brokers that you can trade a small amount with. Like normally you should have at least $1,000 to trade US 30, but if you're on CoinEx, I think you can trade for like way less, for like a couple $100. See, James said, when does AU 200 move? Can we use the US 30 strategy? So here's the thing. You could probably use it, but I personally haven't tested it, so I can't give you like, a definite answer. But let's just take a look real quick. So the AU 200, I mean, technically it would move when the market opens. So the problem with this is that the market goes into turnover. So let's see, 5 o'clock. I mean, not 5 o'clock. I think 2 o'clock my time. So whenever the market turns over, which would be right here. And the only reason I know that this is the market turnover is because it goes from 1300 hours to 1600 hours. So, once this happens, this would be the first signal, and you could have taken that one. Similar to, let's see. So it looks like it's at 1600 hours every day. All right, so this is going to be the market open right here, 1650, I'm assuming. This would be the sell right here. And the thing with AU 200 is like, I'm not familiar with what's a good sweet spot. I know for US 30, we have 1500 pips, but I'm not sure what's the sweet spot for AU 200. Like, this is something that I'd have to go back and back test to see, what's normal movement. Because the thing is, this is a huge difference. Like, if it's the same difference for AU 200 for 150 pips, it obviously would hit TP right there. But if we were to make it wider, it might have hit stop loss. So let's see. So like, just for a rule of thumb, I'm just going to leave it at 150, just how it normally is. 1650. Wow, this actually hits pretty nice. So yeah, James, if you want to go and back test this or like try it out yourself, it looks like it's pretty accurate. See, like this right here, I don't know if 150 pips is too tight, because like right here, it went straight up to stop loss, but over here it went straight to TP. So I'm not sure if like this should be pushed out a little farther, because if it was, say if it was pushed up to 2000 or 200 pips, it would have ended up, hitting CP instead of stop loss. But this is something that I haven't tested myself, so like I mentioned, I can't give a definite answer. I wish I could, but obviously I don't want to give you guys false hope. But this actually looks really good. Wow. So that's about like 4 back-to-back wins right there. 1650. And then I think if it reaches too far, like, see this entry is like way down here in London session already, I would just skip it. Because like obviously we're trying to only trade this during that specific session. This looks like this would have been a flop. So yeah, there might be a couple tweaks, or we might have to follow news or something just to have a better understanding of like when to take a trade, where to put our stop loss, where to put our TP, because these look like they went straight to stop loss. I'm not sure if there was news that day on the 15th. Let's see. No, there's no news. So I don't know what caused it to spike up like that, but let's go to one more day. We'll go back a couple more days and see if it plays out. Because if it plays out pretty often, I might just start trading it. Yeah, so after the open, there's the entry. Wow, yeah, it looks like it hits pretty often. I mean, it's like pretty much every other day. There's only been like one loss, I think. All right, so let's just calculate this. So 1 loss, 1 win. We have 2 losses. 1 win, 2 losses. 2 wins, 3 wins, 4 wins, 5, or technically 5 wins. So it'd be 5 wins and 2 losses within, let's see, within about a week, or a little over a week. So the win percentage is pretty high. It's still like an 80% win rate. So, you know, if you took every trade and just let them run, you know, eventually you'd end up in profit at the end of the week. So this might be something good to like back test and see, you know, if you can figure out a way that it works well. I'll be doing the same, especially since I'm going to be focusing on a lot of indices scalping, because I know a lot of you guys like to scalp it. So it works out for both of us. But let's see, we have one more question from John. He said, I opened an account to the US 30, it comes with 200 leverage. Is it a good idea or bad? Yeah, John, so for leverage, you can just use the max leverage. So the thing with leverage is that it just allows you to risk more of your account. It's a little, so the only thing about leverage is it allows you to like blow your entire account on one trade. But if you're using proper risk management, it wouldn't matter because it would have been the same difference. The only difference with like low leverage is that it requires more capital in your account to trade a bigger lot size or to risk more money within your capital. So it doesn't really matter. You can go with the max leverage, but just remember to always use proper risk management. That's going to be the main key, because if you use proper risk management, then the leverage should never really be a problem. And especially if you only have like 200 bucks in the account, or I mean, I don't know how much you have in the account, but I wouldn't put too much in the account. Just put enough that you're okay to lose, because you know, you never know when the worst is going to happen, where you might go through slippage and then your account could go to zero. So as long as you have enough money in the account where you're okay with losing, then I think you should be fine. And you can go with max leverage. Just make sure to always move your stop loss and to always have a stop loss. Because if you don't have a stop loss, your account could literally go to zero, like immediately, if it ever goes into that far of a drawdown. Oh yeah, James said it doesn't take as much capital as US 30. Yeah, I actually like the Aussie 200. Oh, here we go. It would have hit full TP right here too if you were to take today's entry. I like it too because it moves a lot smoother. It's not as crazy as you know, like US 30. It's a pretty smooth move. So, you know, just backing up right here, you can see how smooth it moves compared to like US 30, NASDAQ, and S&P. So that's pretty nice. Samuel said, when you give out signals, you give out 3 TPs. Does that mean we should have 3 positions per trade at signal, TP, and reenter, or so on? So the way that the exit strategy works is, so let me just show you how it works here. So I'll go to a different pair because it's kind of hard to see on the Aussie. Let's just go to US 30. Because there's just a little more space here, so it's easier for me to map it out. So the way that the exit strategy works, it was like how I mentioned earlier in the beginning of the webinar. There's multiple different exit strategies for you to use, and you just have to figure out which one fits your trading style. But if you want to trade exactly how I trade, this is what I do. So right here, you know, depending on how many TPs there are. So let's see. I think for this one, I put, how many TPs did I put? So there's 3 TPs for this one. So the way that this is applied is, I'm just gonna eyeball where the TPs are. I think there was like one that was up here, and then one that was somewhere down here. So the way that I trade is I have 2 positions. I have one position that runs to full stop loss or full TP. So that one I just let run. But for the other one that I'm adjusting, as price reaches TP1, like right here, then you're going to move your stop loss to TP1 to eliminate your risk. So that if price was to come down like this, so you can see right here that price came up and then came down. And you got to keep in mind that these are 10-minute candles. So every time, you know, when this spikes up like that, there's usually some time within this whole candle, because each candle is 10 minutes, for you to move your stop loss. So as the price moves up to TP1, I generally move my stop loss to TP1, so that if price was to come back down, like it did right here, I would get stopped out at TP1 for, I think it was 350 pips, right? Yeah, 350 pips right here. So if you're trading that, that's like a $350 profit. So I would have made 350 on here, and then I'd have my other position that's running to full TP. So that's one example for if it reaches TP1. And then another situation is if it reaches TP2 right here, then you can move your stop loss to TP2. So the same thing here, if price was to reverse on you and come back down, you get stopped out in profit right here. And then I still have my full position that's running as well. So you can see right here, as price comes down like this, I get stopped out at this point. So I would have gone stopped out at 750 pips. I think that's what the TP2 was. So depending on where you want to move it, you can move it to TP1 or TP2. And then I still have my other position running to full TP right here. So instead of just making, 1x profit, I ended up making 1.5x profit because I got half profit off this move up here. And then I also have that second position that runs to the full TP. But it's, it's really going to, like how I keep saying, it depends on your trading style, because the thing is I'm able to run two positions at a time because I'm experienced doing that, but not everyone can do that. So I don't recommend that you do it unless you're like completely comfortable with, moving your stop loss for one position, or if you're able to manage like multiple at once. Because what happens with a lot of people is they end up taking too many positions and then they forget about a couple positions, and then instead of moving the stop loss and profit, they end up taking like a full loss because they weren't able to manage all the positions at once. So unless you're able to focus and manage them properly, then I only recommend you taking one. So if you're just going to take one position, then when price reaches, like say TP over here, the TP1, so if price comes up, move your stop loss to TP1 so that if it comes back down like this, you get stopped out in profit. And then there's no risk from there moving forward. Because once you move your stop loss to this point, there's only two options that can happen here. You can either pull back, you get stopped out right there, or price continues up and you get full TP. But once you move your stop loss and profit, you're pretty much trading risk free. So you don't have to worry about anything. You literally just have to wait for it to either stop you out in profit or hit full TP. But yeah, those are the two main ways to apply that. But yeah, so I think that's it, guys. I don't really see any other questions here. So if you guys have any other questions, I mean, I'll hang around for like a few more minutes. But if we don't have anything else, then I'll be available in the chat. I'm just gonna go grab dinner. So whenever you guys are ready for any other questions, I'll still be in the chat, because the thing is we have news coming up at 7 anyways. Or let me see, where's that? Yeah, it's 7. So I'm not gonna trade until that's done. So probably around 10 p.m. my time, in about 4 hours. That's when I'll call the next trades. If there's anything worth taking, I don't know if there will be, because there's European news at midnight. So, I mean, it's a heavy news week, guys. So this is a week to be careful and to trade conservatively, because you never know, and price might get all crazy, and there's just really no point in taking unnecessary risk, especially at a time like this. Dang, it doesn't look like these moved at all. Oh, there we go with our NZD is about to come down. Hopefully it's TP1 before we get news, because then we can move our stop loss and profit, or you guys can move it now if you want. Yeah, our CHF JPY is still active, and our EG is still active as well. But yeah, guys, so it looks like that's it for today. If you guys have any questions, feel free to reach out on Telegram. I'll still be on there later on today. I'm just gonna go grab dinner, and then I'll come back. Once I come back, it'll be news, and then we can start looking for our next entries. But yeah, guys, so thanks for showing up. If you guys are new here, I do this every Tuesday and Thursday at 4 p.m. Pacific Daylight Savings Time. I usually run for about 2 hours until 6. But if you guys have any other questions, I'm always free to hang on longer. And then I also do the weekly chart analysis on Sundays as well if I'm available. But yeah, guys, if you guys have any questions, feel free to reach out. If you guys want to rewatch this later, it'll be on the YouTube. But yeah, guys, till then, I'll catch you guys in the Telegram. All right, guys. See you guys later.